Welcome back, guys. Crypto for Life channel. Today we'd like to talk about this type of trading model, trading strategy, pattern. You can call it whatever you want. It's buy to sell, sell to buy. How the market makers manipulate the market, how they deliver the price to the right target, and what they do, and how you can find the steps of the market makers or the whales or the soft or the bots on the chart. So let's dive in. Everything what we see on the chart, it's just soft bots from the market makers. Everything what we see on the chart is programmed before, and the price of some assets will be delivered in the right time, in the right moment, for some reason, and the news just deliver the price faster or slower. So this is a classic model, really popular. It can be on the 1 hour time frame, on 5-minute time frame, on a 12-hour time frame, on daily time frame. Intraday, you can find these patterns in a complex with the sessions. A lot of times I found that model before or after the news in the United States, or before some release of Fed decision rate or FOMC meeting minutes. It's classic. I want to show you just this current situation on a market with a BTC. It's a 12-hour time frame, and it's at this current moment, it's so classic. So classic, especially the buy to sell. First of all, what you have to know, it's time frames. If you trade on 1 hour time frame, you open position on 1 hour time frame, and you count your stop loss 1 hour time frame. You have to take a profit on 1 hour time, because a lot of people made a mistake. So they open position on 1 hour time frame, but after that they wait the take profit target on a daily time frame. Or for example, you open position on 1 hour time frame, but wait the target like imbalance on the daily time frame. It's absolutely wrong trade. You will get your stop loss or liquidation. So time frames matter. On this example, I want to show you on 12-hour time frame. Only on this one. You can adjust and find absolutely the same models on different time frames. So it's just a fractals. First time, it's buy to sell. So what does it mean? On this chart, this is an all-time high. It can be the all-time high or some high of level. It can be the previous day high or previous day low, previous session high, some K level where we stop it. It means over this high, we got a lot of stop losses. So it can be like around 1% stop loss. 1% stop losses, it means with a 10x leverage, it's 10% losses. And it's kind of big one because it can be the big one because imagine it's a BTC and there's a lot of stop losses. In general, I talk about a heat map, and the liquidation heat map. And you can imagine a lot of traders open position with 20x, with 50x. So it's multiply the stop losses. That's why this hunt of liquidity looks logical. How to deliver the price higher, but after that, liquidate them. It's pretty simple. It's buy to sell model. We can use only the one indicator, it's volume. We go into correction, everything good. So we hunt this liquidity, this one, and going back. Before we hunt liquidity, we showing us the direction down. Everybody think, no, we go into correction. But after that, with a huge volume candle, the buy to sell model, we always on the big volume push the price higher with a big volume. So here, this is we go higher, but a decrease in the volume. This one. On the last candle, on 12 time frame, we push higher price, so like crazy, with a huge volume, like never before. Here, put the price higher, grab that liquidity, and you have to understand, the market makers not press buy by market one time. No, they, they use like a grid. They accumulate positions step by step. And here, they accumulate, for example, at 101, here 104K, 107. So the average entry is around 104K, this one. They open long. Yes, they open long position and push price higher. Retails this time think just by classic TA, we break all-time high, or for example, or some high. We have to move like this one, breaking out the top, retest, and go higher. Continuation, but it's a trap. But you have to work in a complex. Not all the time it can be the trap. Open long, but after that, they open the same time the hedge position down, this one. And take a look what they do next. In the moment, they temporary in losses. Their long position temporary in losses. Yes, guys, it works like this one. But here, they push price buy to sell. They imitate the order flow higher. They push the price higher with a big volume, big orders. Push the price higher. After that, they open position short because they got a lot of money. They can manipulate the price. They hedge. In this area, all these guys are liquidated, right? In this area, they stop. For example, just example, they stop. It can be here, it can be here, and mitigate their position back to their entry to out at the break even. But they already hunted liquidity. And after that, they work in a profit. So yes, they can close the position in, for example, like, I don't know, in a moment, it was like 6% losses, temporary losses. But after that, they mitigate position. For example, they can close the position in 1%. They cut that losses because of buy to sell model. They deliver the price 15% profit. The key point on the buy to sell model, it's some K level high or low. On a sell to buy, it can be the low. On buy to sell, it's some K level top where we hunt liquidity. Where, for example, on 12-hour time frame, the price should stop. In this case, we have to work like with additional tool, with some factors where we now globally on a monthly time frame, on a weekly time frame, where we now on a daily time frame, where the main zones of support or resistance, where the main imbalances, because in this case, we dump it exactly to close a weekly gap. It could be the monthly gap. So, where we stop after buy to sell model, it depends of context in general. In this case, we have to fix the profit on the next trouble area, right? So on the next some K level. So don't be so greedy. When you found on 1 hour time frame, I repeat, when you trade on 1 hour time frame and you found the buy to sell model, you open position, buy and then sell. You have to fix the profit with your risk management, risk ratio. So don't be so greedy because sometimes you can do everything right, but you wait some 15% profit with 20% profit, but it could be like only 7% profit. The same story with sell to buy. The price dump it. In this case, we close the 50% of the weekly gap. Price bounced with a huge volumes from sellers, right? We bounce back, and the whales and the market makers, they by greed accumulate open short position. It can be like 86, 82, and dump at 78. So they open a short position. Average entry can be like 82, for example. And this is an entry around 82K. Price dump it. Retails most likely see the seller pressure, the big volume, start thinking, so we have to, we sweep it the low, we have to bounce and drop it lower again because we build the order flow, right? But what the market makers do, they open position here because they know before where the price will stop. So they open position here with a stop loss and we go higher. And when we bounce it here, they mitigate position, cut some losses on short, right? And right with the profit. Right with the profit, let's say 14%, just approximately. And again, the main factors should be hunt some K liquidity level, work in a complex on a higher time frames, and the volume. Now, like you can see, the volume decrease from buyers. That's why it would be logical to see this drop and go upside move. Because the people now still in short position. Take a look. This is a classic also buy to sell, sell to buy model. So here we hit the top, some K level. Got it. So we dump it. This was a sell to buy. After that, we push the price higher, and it most likely was the news. This is what I tell you. Especially sell to buy to sell works together with the news perfectly. We grab that liquidity. For example, they can open position here, here. So in average here, like this one. Let's say like this one. They push price higher, right? We grab and hunt that stop losses. Everybody waiting something like this one, continuation, but the market makers know what they do. And for example, they can cut their losses, right? Like, I don't know, 2%, this one, cut their losses. But after that, they can get the 11% profit and volume from sellers. This is a classic model when we grab liquidity and dump it immediately in opposite way. So guys, I hope you like this video. Subscribe, channel, hit the like button, hit the notification button. Don't forget, join my Telegram channel. See you next time, guys.